What's going on? Today is Tuesday, and I did take a trade today, and it was a winning trade, but it was pretty annoying to say the least. So market opened after this swing low, and I'd seen that we'd swept liquidity already here. If you can see, we swept south liquidity, and then from there we had also tapped into our new week opening gap again. And so I was interested in longs towards these relative equal highs here, since I thought that was the draw on liquidity, and it was, as you can see. I took an entry on the 1 minute. Right here we had this inverse fair value gap. After sweeping liquidity, I liked this. I wanted more of a retrace though, so I waited until we had inversed these fair value gaps as well, because we still had a long way to go to the equal highs. And we had this move up here and then displacement down. You can see this down close candle. I entered right about here. Well, obviously where this line is, that's where I entered. My stop was below this fair value gap that was holding well. And where I went wrong was moving my stop at all. So if I didn't move my stop, price would have hit the equal highs, as you can see, would have hit the equal highs, and it would have been a nice risk to reward ratio, and I would have been up $380 on the evaluation today. Instead, we were only up $70 because I trailed my stop, and I actually trailed my stop up to about right here where I'm putting this line. Trailed my stop to there, and price got all the way up to here before getting a small retracement down, creating a internal sweep of liquidity, and I got stopped out. So my take profit 1 got hit. My TP1 was right here at this high. That was my TP1. TP1 got hit, giving me $70, and then I had 1 contract left on there, or 1 micro. I traded with 2 micros. TP1 got hit here, and then we came down, hit my stop that I trailed, and so I missed out on the rest of this move. If I would have left my stop down here, as you can see, we didn't get very close to that at all, and I would have been up $380 today. So really annoying, but the bias was correct. I wanted us to. I had a bullish bias because we just came down into discount of this initial move up after the election, tapped into our new week opening gap, so it made sense for us to go lower. But now I want Tuesday to be the low of the week. So here's Tuesday's low here. Let's name this, we'll go Tuesday low. I want this to be Tuesday's low. Let me get rid of this fair value gap. I don't need this anymore. And I'll leave that bottom one on there. Well, no, I'm going to keep that bottom one. So yeah. By the end of this week, if not by next week, I want us to take all-time highs, which would be right here. We also have a lot of liquidity up there. We have a lot of undisrupted highs, a lot of smooth highs. New week opening gap up here. New day opening gap from last week. I don't pay too much attention to new day opening gaps, but sometimes I will. Mostly new week opening gap. I still have to mark out this week's new week opening gap. But I expect us to also, just go higher over the rest of the week. So tomorrow, what that could look like, say we accumulate in this 1 hour. That is easily what could happen. We'll probably fill this 1 hour. Or we take this high. Tomorrow, I would like to see a manipulation down into this 1 hour. 1 hour fair value gap. or one that we created on this move up, like right here, for instance, before going higher. So I want to see us go lower before going higher tomorrow. If market opens and we go higher, I'll look for a short because I want us to take out sell side before going higher. So I'm open to shorts or longs tomorrow, preferably longs. But yeah, that's what I'm thinking. So what I could improve on as far as psychology, although this was a good trade, I still get fear of missing out. And I mean, I don't even want to say I entered early, but I entered right here, right? When I instead should have waited for price to come down into this, let's look. I always enter early. That's my biggest problem. I could have waited for price to, for example, I don't know what I'm doing. Come down into, jeez, what am I doing? If I would have waited for price to come down into this 1 minute fair value gap, for example, it's really tiny, but just something like that. Instead, I entered here. Just small things like that would improve my trading. Or if I waited for a 5 minute retrace, we didn't really get a 5 minute retrace. But if I would have waited for a 5 minute retrace, that would have looked like this 5 minute down wick right here, where my pointer is. If I would have waited for this candle to come down and close, although it closed higher, or this candle, waited for this candle to close lower. 5 minute retraces are usually a lot better than 2 or 3 minute retraces. Then I could be more confident that I'm not going to get stopped out and go take the equal highs, go take liquidity. So let's just mark out liquidity here. So yeah, this yellow line here is the macro. Depending on how much movement we're getting right at open, I either like to set the macro at 950 or 945, but usually I want to take my trade from 6:45 my time. I'm on West, but we'll call it 9:45 New York time to 7:30 New York time, or 10:30 New York time. And so if we look at our 4 hour, look at our 4 hour candle. Look at this manipulation candle right here, all the way down, took liquidity, closed all the way back up here. Then we get our expansion starting in the macro. We get our expansion towards buy side liquidity. So that's pretty much what I want to look for. Yeah, that's usually what it is. So like, for example, here's another manipulation candle. Notice how this low came down and probably made SMT with the low of this candle. And if we go to previous days, look at these manipulation candles. Look at this one, 7 a.m., 4 hour candle. Got all the way down to here. Closed up here, right? Happens most days on these trading days. I bet you we had one here. Yeah, look at this manipulation candle. All the way down here. Come down to the 15 minute. Come down to the 15 minute. And then it's like, same thing. Look at that manipulation candle. Take liquidity. Create an SMT even. Expand higher, taking out buy side liquidity right here. What the hell? Expand higher. Anyways, you get what I'm saying, right? So that's what I'm looking for. I can't be taking trades without more confirmation because I fear I'm going to miss out. It'd be better to miss out on the trade knowing my bias was correct than to take a trade and get stopped out. So that's what I'm really going to be working on. And I will be honest in every trade journal video I make. So tomorrow we have pre-market news. Same as today, we don't have news during the trading hours. So I'm honestly thinking we might get pre-market manipulation, and then I might have to trade a continuation. But we'll see whatever the market gives us.